Welcome back, Garage Gang. It's Monday night. You already know what time it is. This is your Monday night market recap, and I'm Avatar John, the anchor man they warned you about. Black t-shirt, no teleprompter, no filters, just heat straight from the garage. Today wasn't trading, it was a crash test at full speed. Picture this. You're doing 200 down the straight, tires screaming, everything perfect, and then the tire blows. You feel that split second of weightlessness before the wall hits? That's what the market felt like today. Smooth 1 minute, slow motion carnage the next. And we all asked the same question at the same time. What the happened today? Bitcoin got smoked. Altcoins caught stray bullets like they were standing in front of the firing line. Then out of nowhere, a ghost whale wallet wakes up. Years of silence, one move, and the whole chain shook. DeFi flatlined before noon. Money scattered. And right in the middle of the madness, a tech giant signed a deal that could flip the entire AI board overnight. That's the setup. The crash, the ghost, the whispers of a deal. But let me tell you what really matters. Triple X has been in the trench all day, and he's hotter than Vegas asphalt in July. He's got setups that still print while everyone else is spinning in the smoke. Yeah, he hit, and you'll see how. Tonight's show is straight fire. And yes, we've got answers. Before we light the fuse, you know the drill. Smash that like, hit follow, share it with your fellow degens. Or that guy at work still bragging about this week's meme pump. By the end of this broadcast, you'll know who caused the crash, who's cashing in, and where the next real money's hiding. The lights are on, the track's hot, the garage is live, and tonight, we let it rip. Let's get into it, because tonight wasn't just noise, this was structure breaking. The market didn't fall because of one bad tweet or some influencer panic. This was the math kicking in, the machine showing its teeth. Bitcoin cracked down to 105,000, and every major altcoin took a bullet with it. Once that line snapped, leverage did the rest. Funding flipped negative, traders got liquidated, and algorithms did what they always do. Hunted every stop on the board like sharks in shallow water. In TradFi, the pain echoed. The Dow dropped hard into the close. The Nasdaq gave back last week's fake gains, and the dollar flexed like a heavyweight, reminding everyone who really runs this ring. Yields pushed higher across the curve. Liquidity's tightening again. You can feel it. Credit spreads widening. Repo desks groaning. That's not sentiment. That's plumbing. That's the sound of pressure behind the walls. Here's the truth. Last week's Fed cut wasn't the fuel. It was the fuse. Markets ran too far, too fast on the fantasy that liquidity was coming back cheap. Then this morning, reality hit. Liquidity isn't back. It's gone. ETF redemptions yanked cash out of the system. Derivatives unwound, and the dominoes lined up perfectly for a textbook flush. Across the pond, funding rates spiked. SOFR printed 4.22%, and overnight desks went tight. Dollar strength dragged everything with it. Gold dipped, crude wobbled, and tech bled out like a stuck pig. This is what risk-off really looks like. Cash in demand, leverage punished, and traders pretending they saw it coming while they quietly move their stops. The structure cracked, the math kicked in, and if you were overextended, you found out the hard way. Now that we've mapped the damage, stay right here, because when we come back, we're pulling up the headlines that lit this fire. The ghost whale, the DeFi collapse, the AI shakeup, BS. And we'll show you exactly how those sparks connected to turn an ordinary Monday into a full-blown 200-mile-an-hour wipeout. You just watched the structure break in real time. Now let's rewind the tape and see what actually triggered it, because every fire has a spark, and this one had a few. The first flash came before the market even opened. A ghost whale wallet wakes up, dormant for years, suddenly alive, pushing size that rippled across every exchange. When that kind of wallet moves, it's not retail noise. It's institutional capital, legacy money that's been asleep since the last bull. Traders froze. Order books went thin. Algos picked up the scent. And within minutes, the bid side of the market evaporated. That single move sent shockwaves through the system. It wasn't about what the whale sold. It was about the message it sent. The big money is awake, and it's not afraid to take profit. Then came the second hit. DeFi cracked. Balancer, one of the most respected protocols in the space, got exploited for roughly 70 million. That wasn't just a hack. That was a trust fracture. When a top-tier protocol goes down, it doesn't just lose funds, it loses credibility. Liquidity providers pulled capital. Other DeFi names widened spreads, and the fear index inside the blockchain economy spiked. You could almost hear the hum of smart contracts turning into alarm bells. And while DeFi was bleeding out, the next wave hit. ETF outflows. $470 million walked out of Bitcoin products in a single session. That's not kids panic selling. That's hedge funds, family offices, and asset managers choosing cash over conviction. They weren't scared, they were calculating. That's the difference between retail panic and institutional exits. Retail reacts, pros reposition. Those outflows drained liquidity from spot and derivatives markets at the same time. It's like pulling the coolant out of an engine running at redline. But the universe wasn't done throwing punches. AI, the darling of this entire market, took a gut shot of its own. A rumor hit that OpenAI was sitting on $600 billion in obligations. No proof, no context, but that's all it took. One headline, and every AI stock, every compute token, every future of tech narrative got rattled. The irony? On the same day, Amazon signs a 38 billion GPU contract with OpenAI. That's not a rumor, that's a statement. While traders panic over debt stories, the giants are signing checks big enough to power small countries. That's how you know the AI war isn't slowing down. It's just moving behind closed doors. All of that, the whale, the hack, the outflows, the AI rumor, hit inside 12 hours. 4 separate detonations across 3 sectors, all feeding the same theme: liquidity tightening, trust fading, and leverage dying. It's not coincidence, it's correlation. And once that chain reaction started, everything that followed was inevitable. Now here's why it matters. This isn't just a bad day in crypto. It's a stress test for the entire risk complex. DeFi security, ETFs resilience, AI's narrative, all being tested at the same time under real pressure. And in moments like this, you find out what's real and what's hype. You find out which projects can handle the hit, which protocols keep liquidity, and which companies actually have balance sheets instead of buzzwords. So yeah, today hurt, but pain clears the field. And while the panic crowd is still screaming on social media, the professionals are already tracking the next rotation. That's where we're heading next, into the sectors that didn't just survive, they outperformed in the chaos. Solana's resilience, the gaming rotation, the AI infrastructure names that quietly held their ground while everyone else was spinning. Stay locked in, because the next segment is where we find out who's still standing in the smoke. All right, we've covered the crypto carnage, the whales, and the on-chain black ice. But Wall Street wasn't cruising in sunshine either. The TradFi lane spun out hard. The block got hot, and when it did, the suits didn't wait for confirmation. They packed up, shut it down, and ghosted before the smoke even hit the screens. The Dow bled into the close. The Nasdaq coughed up every gain from last week. The S&P lost traction halfway through the session. You could hear it, that hiss of liquidity leaving the system. Yields ripped higher. The 10-year brushed 4.1. The dollar flexed back into triple digits. That isn't mood, that's mechanics. When the cost of money rises, every leveraged trade starts to buckle. Then, the shocker. Texas AG Ken Paxton sues Johnson & Johnson and Kenvue, claiming Tylenol causes developmental issues in pregnancy. And right there on the fire, Kimberly-Clark buys Kenvue for $48 billion. They didn't buy safety, they bought litigation. The ink's barely dry, the lawsuit hits, and suddenly, defensive stocks look like live grenades. The block got hot, and the pros bailed before the story finished printing. Consumer staples cracked, pharma names stumbled, and then another hit landed. PMI printed below 50. That's the Purchasing Managers Index, the pulse of manufacturing. Over 50 means factories growing, orders flowing, workers busy. Under 50 means contraction, orders slowing, demand fading, confidence gone. So yeah, the car's still flying down the track. The crowd's cheering, but every trader watching that print knows what they're seeing. Smoke coming from the hood. Pile on that OpenAI debt rumor, $600 billion in obligations, and big tech flinched. AI names softened, semis slipped, and the innovation trade suddenly felt mortal. Crude slid on demand fears, gold sank under yield pressure, and the only thing climbing was the VIX, Wall Street's fear gauge. Oh yeah, let me break this down for you. The VIX isn't a stock, it's the market's pulse. It measures how expensive it is to buy insurance on the S&P 500. When traders feel safe, they skip protection. When they smell smoke, they grab puts and the cost explodes. When the VIX rises, fear gets a price tag. Every tick higher is another trader paying up to stay alive. Today, it jumped double digits, the market's way of saying brace for impact. That's the fear deal. The sound of capital leaving the room. Credit tightens, liquidity hides, and the charts look like flat lines. Professionals aren't panicking, they're executing. They move first, move quiet, and leave before the herd even notices the exit. But fear clears lanes, and new money always finds the open one. While TradeFi was counting losses, big tech kept signing contracts. AI didn't flinch. It doubled down. Let's be real. The world's not just watching OpenAI anymore, it's orbiting around them. Every headline, every contract, every rumor, all roads lead back to the same question. How the hell are they pulling this off? In the last 30 days, they've inked more billion-dollar deals than some countries sign in a year. 38 billion with Amazon for cloud and compute, 6.5 billion with CoreWeave for infrastructure expansion, partnerships with chip makers, data centers, payment networks. It's like they're playing Monopoly with real money and the board's on fire. On paper, it looks untouchable. Global partnerships, government access, big tech, all fighting to plug into their ecosystem. But here's what nobody wants to say out loud. These aren't cash deals. They're promises. They're commitments stacked on top of commitments, all backed by the same assumption that tomorrow's revenue will pay today's rent. They're betting the whole house on growth that hasn't happened yet. And the world's starting to ask the question they can't answer. What happens if the demand slows down before the money shows up? They built a billion-dollar empire on an IOU to the future. And that's why the air feels so charged right now, because everyone knows that if OpenAI can't cash those checks, the whole AI sector catches the shrapnel. It's not hate, it's gravity. Every revolution reaches a point where the math has to match the dream. And we're staring right at that moment. So yeah, OpenAI's writing history in real time, but the pen's starting to shake. Can they really keep buying compute, leasing clouds, and signing deals like interest rates don't exist? Or is this the moment we realize even the smartest minds in the room can overextend? That's the cliffhanger. That's where we are. The world's on fire, and OpenAI's holding the gasoline and the lighter. And just like that, the match hits the pavement. OpenAI's holding the gasoline and the lighter. But the blaze doesn't stop with them. The fire spreads fast. Because when one giant builds an empire on IOUs, everyone else rushes to keep up. And now the whole field's playing with borrowed oxygen. Every company chasing AI scale is running the same play. Sign, expand, repeat. Amazon drops billions into cloud hardware while turning around and laying off 14,000 workers, blaming layers, not automation. Then, in the same breath, they post Q3 profits of $21 billion. But look closer. Free cash flow craters to barely 15. They're making record money and still spending faster than they earn. That's not greed. That's fear disguised as growth. Because when the market's built on speed, slowing down looks like death. Over in the search lane, Perplexity AI quietly makes its move. Inks a deal with Getty Images to license the visuals every other model steals. That's the first real sign that AI's growing up. Ethics as strategy. Compliance as competitive edge. They're not trying to win the hype war. They're building trust. And in a world drowning in deepfakes, trust is the rarest asset there is. Meanwhile, the culture can't stop watching the circus. Sam Altman cancels his 7-year-old Tesla reservation, and the internet explodes. His brother jokes, Twitter lights up, and the meme economy cashes another payday. That's what leadership looks like now. CEOs turning volatility into visibility. The same people reshaping industries are shaping culture while they do it. It's a strange time to be alive. Companies setting profit records while firing people. Startups chasing legitimacy while giants chase liquidity. And through it all, AI just keeps expanding into your browser, your wallet, your newsfeed, your job. So where does it all go from here? We're living in the overlap between innovation and exhaustion, between opportunity and overreach. The math hasn't caught up with the dream yet, and everyone knows it. That's why the markets feel like they're holding their breath. Stay with me, Garage Gang, because down in the trench, Triple X has been watching this whole inferno from ground level. He's got trades that turn panic into performance, fear into fuel. And he's about to show us how you make money while the world recalculates its limits. This is the part we've been waiting for. The smoke, the fire, the wreckage, that's all noise. Here in the trench, it's about the work. No hype, no headlines. Just you, your screens, and the next heartbeat of the market. Red Rock Casino, Vegas, the locals' palace. Not the tourist zoo on the strip. This one's got class. Leather, marble, blue glow pools, and an army of 8s and 9s running the floor like clockwork. The air smells like money and steak. But Triple X isn't here for the view. He's earning his steak and lobster the hard way, one microcap at a time. He's in the back corner of the casino bar, hoodie up, eyes wired. Axiom on one screen, Bull-X on the other, Dex Screener blazing in the middle like a cockpit. This isn't a 9 to 5. This isn't set it and forget it. This is the trench. You don't walk away. Not for a drink, not for a smoke, not even to hit the restroom. You blink and your position flips red. You want to gamble? Go put 100 chip on black. Go take a leak, come back, and see what happens. This isn't gambling. It's combat. The plays are small, sharp, and alive. Tiny fires burning under the radar. And tonight, they're stacked across chains like a blackjack spread. CR7 Soul, celebrity meme rocket, 5,000% holder surge. Volume north of 50 million. Clean LP locked tight as a drum. He rides it like a supercar. Fast in, faster out. Playpin, Sol. Meme meets infrastructure. 9 million turnover. Liquidity locked. Up 700% in under a day. That's what happens when smart money front runs a trend. Wobbles, Sol. The sleeper. Steady climb, low float, consistent inflows. When others chase noise, he stalks this one. Floki, Sol. Revival meme. 12 hours old. Already 8 million in volume. LP humming, V-shaped recovery. That's where emotion meets opportunity. Then the base chain lights up. Vein base, new listing, real utility buried under meme wrappers. Volume building, contract clean, liquidity shallow, the kind that can double overnight if a whale breathes on it. Sui wave, BNB K9, R ping, new money sneaking in where no one's watching. It's not random, it's rotation. When the majors sleep, the side streets start to roar. XXX runs it all through Axiom's filters, contract scans, holder growth, LP migration. Bull X plots the liquidity pools, wallet clusters, on-chain chatter. He's reading wallets like tells at a poker table. Every token a card, every trade a move. And this isn't luck. He sizes tight, 2, maybe 3% risk per position, just enough to sting if it goes wrong, enough to feel alive when it runs right. Stack the small wins, survive the red candles. That's trench discipline. Around him, Red Rock's alive, the hum of slots, dealers calling bets, soft jazz mixing with the sound of chip stacking. But he's deaf to it all. He's not chasing jackpots, he's manufacturing them. 450,000 in new stable inflows on Solana, volume up 18% sector-wide. He can feel the rotation, AI tokens cooling, memes warming, liquidity crawling out of the rubble. The trenches are moving, and he's already there. Eyes locked on the screen like it owes him money. When the numbers hit alignment, volume spike, LP confirmation, holder surge, he clicks once. No drama, no hesitation. Precision in motion. That's the difference between the gamblers on the floor and the operator in the booth. They're hoping to get lucky. He's building luck by force. When the screens finally cool and the pool lights shimmer outside, that's when he stands, stretches, and finally orders that steak and lobster. Not a reward, a refuel. Because when the rest of Vegas sleeps, the trench doesn't. It never stops watching, never stops hunting, and neither does XXX. Fear's still in the air, liquidity still thin, but the plays are alive, and the man behind the screens is already gearing up for the next wave. Safety off, engines hot. The casino lights fade, the noise dies, and the garage lights hum back on. XXX runs on instinct. Lulu runs on precision. No drinks, no distractions, no chatter. Just charts glowing in the dark. Each candle a heartbeat. Every line a pulse of truth. She doesn't guess. She calculates. When everyone else talks about headlines, she talks about levels. When the world panics, she measures. And tonight, the charts are speaking loud. Lulu leans forward, taps the screen once, and says, "You want to know what really happened today? Forget the news feed. The candles already told you." Then she gets to work. Bitcoin, BTC USD. Bitcoin tried to fake strength, failed and fell. It pushed near 106,000, rolled over and hit 104,000 before finding weak support. Every bounce smaller, every pullback deeper, lower highs across the board. Support sits at 104,000. Break that and 102,000's waiting. The only move that changes tone is a full close above 106,800 with real volume behind it. Until then, this isn't a story. It's a range. Scalp the edges, stay nimble. Solana, SOL USDT. Solana's the live wire tonight, coiled between 164 and 168. Volumes creeping back in, momentum still flat. A break above 170 puts 175 to 178 in play fast. Drop below 162 and you're sliding to 155 before you can refresh. Moving averages are compressing. That's the spring before the snap. Ethereum, ETH USDT. Ethereum spent the day dragging a downward channel. Support is 3,570. Lose that and 3,520's next. A push above 3,630 with strength gives you a relief leg to 3,700. RSI's buried, momentum fading, but divergence is forming. That's pressure building under the surface. Cardano, ADAST. Cardano's holding its ground, range bound between 55 and 58 cents. Stacking higher lows, quiet momentum climbing. Break 58.2 cents and 60's your next stop. Lose 54.8 and it unwinds back to 52. It's not loud, it's steady. The patience trade. The read across the board, every chart still leaning down. Volatility tightening, that's compression. When it breaks, it won't whisper, it'll shout. Short-term oversold bounces are on deck, but the bigger trend hasn't flipped yet. Liquidity's thin, moves will be violent. This isn't buy and forget. This is watch and react. Because in this kind of market, step away for 5 minutes and the reversal pays someone else. Lulu's voice cuts through the hum. The chart doesn't lie, people do. That's her whole philosophy. Cold, clean, and disciplined. Charts don't care about narratives, only levels. You don't hope, you read, you respond. The day was chaos, the night is discipline. The candles keep breathing and she keeps watching. When everyone else guesses, Lulu listens. That's why she wins. And remember, Lulu's a pig. 4 hooves, sharper eyes than any analyst, snout buried in the data, sniffing out resistance before it forms. She's the head of technical analysis in the garage, and she's never missed a move. None of this is financial advice. It's the garage beating the storm, one candle at a time.